Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about tax lots. I brought this up in my last video talking about some of my day and swing trading and really want to dive into this subject because I think a lot of investors, especially a lot of you guys on Robinhood, will have tremendous tax advantages by specifying the particular tax lot to be sold when doing some day and swing trading. So as you guys remember from my last video, I've done a lot of day and swing trading in stocks that I also have long positions in, and really the idea behind holding a stock for the long term is getting the tax advantages from long-term capital gains as well as qualified dividends. So just to quickly remind you guys, if you hold a stock for greater than 1 year before selling off, you have tremendous tax advantages from doing that. Tremendous tax advantages from long-term capital gains. So for example, if you fell into the 35% tax bracket for ordinary income, if you bought and sold a stock within a year and only qualified for short-term capital gains, you'd pay $35 for every $100 of gain. So essentially taxed at the 35% tax bracket. However, if you held that stock for greater than 1 year before selling off, you would qualify for long-term capital gains and only pay 15% or $15 for every $100. So you can see right off the bat, you're essentially making 20% or saving yourself 20%, which is an excellent return in and of it itself. Same thing applies for dividends. They're a little bit more complicated, but if you can hold the stock long enough to make that dividend a qualified dividend, again, you drop from the 35% to the 15% rate of taxation. So again, you're saving yourself or making 20% return on investment just with those tax changes. You're really doing nothing differently by buying and selling the stock. You're simply holding the stock for a little bit longer term to make that tax essentially decrease by 20%. And if you fall into some of the other tax brackets, the savings isn't quite as high as 20%, but you still are saving yourself 10, 15, 17% in taxes at the end of the year for essentially doing nothing more than holding the stock for a specified period of time. So you can see the power behind getting qualified for long-term capital gains as well as qualified dividends. A tremendous tax savings. So a lot of this has to do with the tax lot. So for example, if you bought a security multiple times, each time you bought a security, it's going to have a different tax lot, essentially designation put on it. And you can see that this nicely overviewed here. Each time you purchase a security or stock, a new position is a distinct and separate tax lot. And this really comes into importance when the brokerage is trying to account for which stocks are sold when you go ahead and sell off a stock. And you can see in the middle there, the tax lot identification, is a method, is a way of determining which tax lots are to be sold when you have a position consisting of multiple purchases on multiple dates and multiple prices. So again, if you hold a stock for a longer period of time but also do some day and swing trading, there needs to be a tax accounting method for determining which tax lot is going to be sold off. And this comes into importance with Robinhood because if we go to the bottom here, there's a number of different ways in which a brokerage account can account for the tax lots. But you can see here the default method and the one required by the IRS is the first in, first out method. So the first stock that you bought will be considered the first one that will be sold. So if you bought a stock again 10 times on 10 separate dates or 10 different prices, and then you start selling off the stocks, let's say 10 times again, the first time you sell a stock, it'll take the first stock you bought. So again, you're kind of preventing yourself from ever getting any long-term capital gains or qualified dividends if you're day and swing trading on a stock you hold for the long term as well, because you'll never have any stocks held long because the default method is first in, first out. They will always be selling, or the brokerage account will always be selling off the first stock you bought. You can see here, nicely detailed on the right there, the first in, first out is selecting the earliest acquired securities to be sold or closed out. So again, that has long-term implications for your taxes at the end of the year. If you're doing a lot of day and swing trading on a stock that you're also holding long, you'll never get qualified dividends and you'll never get the long-term capital gains rates applied to your stocks that are sold long-term. However, you can see here that there's a number of different tax ID methods that can be supported. Here's another one, the last in, first out here. So this is essentially selling off the stock that you had just most recently purchased. So this would be perfect for day traders that also have a long position in a stock. So you can buy and sell stocks in any particular day, but you're not selling off the stocks that you may have bought a year or 5 years ago. And you can see on the bottom there, long-term transactions are generally taxed at lower tax rates than short-term transactions. Again, going back to the qualified dividends and long-term capital gains rates. So this would be perfect for a day and swing trader that has a long position in a particular stock. You can see there's a number of different tax lots here. I'm not going to go into each one of these, but essentially the tax lot method that's used by Robinhood is the default one, the first in, first out. And unlike, for example, my E-Trade account, I can specify for each different tax lot what I want to do with that. If I want to do limit sell on a particular tax lot, I can do it for each individual tax lot. I can specify which one I want sold off. In Robinhood, you can't really do that. You can just buy and sell. You can contact the the brokerage account about which security you want to be sold off, but I think it's a little bit more difficult in doing that. I think if we go down here, if we go to the specific tax lot here, you can see that instead of staying with the FIFO, the first in, first out default tax method, you can specifically choose which tax lot to select. And you can see in the middle there as well, you may select your specific tax lot from the day following your trade execution or at the latest before 11:59 p.m. Eastern Standard Time on the settlement date of the trade. So I think it is possible, as I said in my prior video, to contact Robinhood to specify exactly which tax lot that you want sold off. But the other problem with Robinhood as well, unless you take or keep a detailed spreadsheet like I do, you'll never know exactly which tax lots you have in your particular account. Like I said, for my E-Trade account, every time I buy or sell a security, there is a nice separate tab for the tax lot. It tells me exactly what price I paid, how many shares, what was the date, so on and so forth. But in Robinhood, we don't have that. So unless you are keeping accounting on your own via a spreadsheet, which I do, you're never going to know how many tax lot you have for a particular position or particular stock that you hold. So I think this is going to be very, very cumbersome, and not even sure how Robinhood would be doing this. I think they would have an accounting of your tax lots, but it's not made known to you. So it is possible, I think, to contact Robinhood to specify which tax lots, but again, I think it's going to be very cumbersome, and it's going to be very difficult for you as the investor, unless you're keeping very detailed records, to know how many tax lots you have on a particular security if you have bought and sold that security many, many times. So yeah, that's kind of what is the importance of tax lots. Just kind of wanted to talk about tax lots, why it's important, and really the tremendous savings or tremendous indirect income you can make from getting qualified as well as long-term capital gains, qualified dividends and long-term capital gains. You can save up to 20% depending on your tax bracket, but for most folks you'll be saving anywhere from 10 to 25%. So lots of important implications for tax time. I think Robinhood needs to make it a little bit better or easier with regards to tax lots, to specify which tax lots can be bought or sold off. And again, there are a number of different ID methods for the accounting purposes with regards to following trades. The first in, first out is the default mandated by the IRS, but you can see here there's a number of different tax lots that are supported, at least here by TD Ameritrade and Robinhood. Not sure what they support, but you can see in the middle here specific tax lots are able to be specified even after a trade is executed. Again, the following day following the trade execution or at the latest 11:59 p.m. Eastern Standard Time on the settlement date of the trade. So just wanted to quickly talk about tax lots here. I hope I didn't ramble too much with this particular video, but I really wanted to give you guys an idea of what or why the importance of tax lots should be considered when buying and selling off securities, especially for investors who have long positions in any particular stock that they are day and swing trading. So yeah, kind of with that, I'll end the video here. If you guys have any questions, I know this is a kind of a complex video, and there's a lot more details behind this than the simple video I put out here. So if you guys have any questions about tax lots, let me know in the comment threads, and I'll try to the best of my ability to answer those. And again, if you guys have any good ideas for future videos, let me know. Always looking for new topics to read up on and research. So kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. Until next video, we'll see you then.